You have 50,000 rupees sitting in your bank account. It's doing nothing. You've heard the word invest 1,000 times, but nobody told you what happens after you do. Nobody told you about the levels. Level 1, the beginning. You have money, you make a move. It's a Tuesday morning. You're sitting in a chai shop near your office. Your phone buzzes. A friend sends you a screenshot. He made 12,000 rupees in 3 days. From stocks. You stare at the number. You think, that's 2 weeks of my salary. That night, you open Zerodha. You deposit 10,000 rupees. You buy your first stock, a large cap, safe, boring. Emphasis, because someone on YouTube said it's stable. You refresh the app 17 times before sleeping. The next morning, you're up 340 rupees. It feels like you discovered electricity. This is level 1. Everyone starts here. Most people think this is the whole game. It's not. Level 2, the education. You start reading. You think you're becoming smart. You stop watching Netflix. You start watching market analysis at midnight. Candlestick patterns, RSI, MACD, moving averages. You write terms in a notebook like a student preparing for an exam you don't fully understand. You join 3 Telegram groups. One calls himself Market Guru. He has 84,000 followers. He posts tips daily. You follow them. Sometimes they work, sometimes they don't, but you stay. Meanwhile, your neighbor mentions his flat in Mohali. Bought it in 2015 for 28 lakhs rupees. It's worth 61 lakhs rupees now. You do the math in your head. That's more than double in 9 years. You think stocks can do that in 9 months. You're not wrong. You're also not right. You just don't know which one yet. Level 3, the comparison begins. You start asking the real question, stocks or property? You ask your father, he says property, always property. You ask your colleague, he says stocks, more liquid, more control. You ask the internet. The internet argues for 6 hours and reaches no conclusion, so you decide to figure it out yourself. You open a spreadsheet. Property, 40 lakhs minimum entry. Locked in, illiquid, slow. Stocks, 500 rupees minimum entry. Instant, liquid, fast. You feel like stocks are obviously better. You're thinking like a beginner. Beginners look at entry cost. Professionals look at exit reality. You don't know the difference yet, but you will. Level 4. You go deeper into stocks. More money, more confidence, more mistakes. 3 months pass. Your 10,000 rupees is now 14,200 rupees. You feel like a genius. You deposit 40,000 rupees more. You start looking at mid-cap stocks, smaller companies, higher risk, higher reward. A stock called something in pharma catches your eye. It's been climbing for 6 days straight. You buy 15,000 rupees worth. Day 7, it drops 11% in 40 minutes. No reason, no news, just down. You stare at the screen. Your stomach feels like it's fallen through the floor. You don't sell, you hold. You tell yourself it'll recover. Sometimes it does, sometimes it doesn't. Yours takes 4 months to recover. 4 months of checking the app every morning like checking if someone is still breathing. Meanwhile, that same 15,000 rupees sitting in a fixed deposit would have made you 1,100 rupees in peace. You start to understand something. Stocks don't just test your money, they test your mind. Level 5, the property reality check. You think about going big, you see what big actually costs. You visit a property expo in Sector 17, Chandigarh. Clean floors, models of buildings, men in blazers. A builder approaches you. 2 BHK, ready possession, 55 lakhs rupees. You do the math. You don't have 55 lakhs rupees. You have 1.4 lakhs in your trading account. The gap feels like a canyon. But then you sit down with a loan calculator. 55 lakhs rupees, 20% down payment, 11 lakhs rupees up front. Home loan for 44 lakhs rupees at 8.75% interest, 20 years. EMI
38,800 rupees per month, every month, for 20 years. You multiply it out. Total paid, over 93 lakhs rupees. For a 55 lakh rupee flat, you paid 38 lakhs rupees extra just in interest. Your face changes, but the builder smiles. He's seen this face before. He says, "Sir, in 2032, this flat will be worth 90 lakhs rupees easy." You don't know if he's right, but you also don't know if he's lying. That's the game. Level 7. The stock temptation spikes. You discover F&O. This is where people disappear. Someone in your Telegram group posts a screenshot. 2,200 rupees profit in 45 minutes from options. You've heard of futures and options. You always skipped those videos. Too complex. Now you click. You spend 2 weeks learning. Call options, put options, strike price, expiry, premium. It sounds like another language, but when you understand it, it feels like a cheat code. Leverage. You can control 1 lakh rupees worth of stock with 5,000 rupees. If the stock moves 3% in your direction, you double your money. If it moves 3% against you, you lose everything you put in. You paper trade for a week. You make profits on paper. You think you're ready. You are not ready. Nobody is ever ready. Level 8. The real danger. This is where the story splits. 2 paths, 2 fates. Path 1, the stock trader. You put 20,000 rupees into an options trade. Nifty weekly expiry. A big call bet. The market opens flat. Then it drops. Slowly, then fast. Your 20,000 rupees becomes 6,000 rupees in 2 hours. You don't exit. You wait for a reversal. It doesn't come. Expiry day, your position expires worthless. 20,000 rupees gone. Not lost, gone. You sit at your desk and feel a very specific kind of silence, the kind that makes you question everything you thought you knew. You look at your bank balance. You think about that Chandigarh flat. Path 2, the property investor. Different person, same city, same year. She took a home loan at 32, stretched, sacrificed, no vacations for 3 years. Every month, EMI paid, on time. Year 5, she gets it rented out. 18,000 rupees rent per month. Her EMI is 38,800 rupees. Effective cost now, 20,800 rupees. Still high, still painful, but something else is happening. The flat she bought for 55 lakhs rupees is now worth 74 lakhs rupees. She hasn't sold, she doesn't need to. The asset is working, quietly, without drama, no app to refresh, no candlestick, no expiry date. Just compounding reality. Level 9. The truth nobody posts on social media. This is where both worlds collide. The stock market can make you rich faster than anything. It can also erase years of savings in a single session. Property moves slowly like a glacier, but glaciers reshape mountains. Here is what they don't show you in the highlight reels. 93% of retail options traders in India lose money. SEBI published that data, real numbers, not opinions. But in the same decade, Mumbai property has returned an average of 7 to 9% annually. Not exciting, not viral, but real. Now here's the part that breaks most people's frameworks. The best investors don't choose, they stack. They use the stock market for liquidity and speed. They use property for stability and leverage. They treat them like different weapons, not competitors. But to do that, you need capital, patience, and a strategy. Most people have the capital. Almost nobody has the patience. The strategy, even fewer. Level 10, the emotional cost. What they never talk about. The stock market doesn't just take money, it takes sleep. It takes focus. It takes relationships when you're checking your phone at dinner. It takes confidence when 3 trades go wrong in a row and you start doubting your own judgment. Property takes something different. It takes time. It takes paperwork, lawyers, site visits, rain delays, builder excuses. It takes years before you see the return clearly. Both systems extract something from you. The question is, what are you willing to give? Because every level of wealth has an entry fee, not just in rupees, in something more personal. Level 10, the final choice. This is not the end of the story. This is the beginning of yours. You're back at that chai shop, same Tuesday morning, but you're different now. You know what a mid-cap drawdown feels like. You know what an EMI calculation looks like at 2 a.m. You know what SEBI data says about retail traders. You know what compounding rent looks like in year 7. Now you have a real decision to make, not stocks versus property. That was never the real question. The real question is, who are you